This is a drum I've been beating for a little while. We're top of a credit bubble, and it's the biggest credit bubble in history. And if you don't understand a credit bubble, just think about the debt bubble. You will, I'm sure, confirm that we've never seen so much debt in the world. Credit is the other side of debt. This is the biggest credit bubble in history, and credit bubbles are reflected in stock prices, and when they go pop, they go down, and I think that's what we're seeing. The situation is made worse by Trump's tariffs because of timing. At any other time, if we weren't in such a bubble, these tariffs, I don't think would have such a great impact, but the combination really of a debt bubble bursting and tariffs is exactly what we saw in 1929 to 32. This time, it's even worse because the debt bubble is even bigger, and also the tariffs have a greater effect because back in 1929, basically America was more or less self-sufficient in terms of imports and exports and so on. Nevertheless, the impact of Smoot-Hawley was really pretty bad. Today, of course, everything works on supply chains. You get people like Apple and all the rest of it. They've got manufacturing facilities in Eastern Asia, and all the design is done in California. If you read the blurb on the combination of the two things, I think is likely to be worse this time, potentially worse. And it's difficult to see what the Fed or the US Treasury can do about it. But I think there's a long way further down to go. I don't make the comparison with 1929 to 32 lightly. It is exactly that. So I think we're going to see a very significant fall in stocks prices. And also, of course, the other thing is that brings into question the survivability of many companies and also the banks. The banks will take bad debts on the nose. That is the way in which credit will be eliminated. The value of the credit is the other way in which credit is eliminated in effect, not numerically, but in terms of total value. And it's a process, as I say, which I just can't see how the Fed can stop it. They can't manage their way out of this problem. Furthermore, bear in mind that foreign investors have something like $14 trillion tied up in US stocks. Are they going to really just sit there and watch these values go down? No, they're going to get out. I wouldn't say they get out of $14 trillion worth. Apart from anything else, it'll be worth a lot less by the time they start really getting out. But you can see that there is massive selling pressure going to occur from that quarter, particularly because of two things. The first is that, if you like, the deep recession, and it's going to be a deep recession, which is implied by collapsing stock prices, plus these trade tariffs, plus the loss of value in credit, which is the way in which the credit bubble will deploy itself. That's going to lead to a heightened risk, if you like, of owning foreign currencies. And consequently, the only way in which the dollar will be supported or could be supported is for the Fed to raise interest rates. And if the Fed doesn't raise interest rates, then foreigners are just not going to go and buy the US Treasury debt, and they won't stop selling the dollar. So this is actually, I think, a very, very important moment in the history of fiat currencies, and I think it is actually the beginning of the end of this fiat currency period. The entire banking system, if you look at the wider banking, financial ETFs and so on, they have been extremely weak. And this does, I think, indicate heightened fears, if you like, of systemic risk. The American banking system is highly leveraged compared with the past. I guess that you're looking at around about 15 times asset to equity. So bad debts doesn't take a lot in the way of bad debts to wipe out the equity and give you negative equity, if you like. Worse than that, of course, we've also got the Fed is already deeply into negative equity. How does the Fed actually rescue a commercial banking system or backstop a commercial banking system when it itself is deeply in negative equity? Well, the answer to that one is that either it prints the money, which of course is, if you like, credit replacement, and in a sense would just devalue the dollar even faster, or alternatively it turns around to its government or its shareholders, and in this case I think we assume it's the government, though we hear all sorts of things about how it's privately owned and so, but it would turn around to the government and say, look, we've got to recapitalize. And so you've got the prospect of a government in a debt trap recapitalizing its central bank. Is this going to sort of spread enormous confidence around the world about the outlook for the dollar? Well, questionable, I would say. Moving on to other areas where there is very high bank leverage, higher than the United States. In particular, you've got Japan, obviously, and you've got also the Eurozone. Eurozone banks and Japanese banks typically have asset to equity ratio in excess of 20 times. And that is something that's really come about by banks expanding their credit in all order to be profitable in times of negative interest rates. So the damage of negative interest rates, if you like, is still very, very much with us. As to where the risks actually lie, I think we've already seen American banks try to move out of risk lending, away from lending to corporates in particular, into lending to the government. And the lending to the government is very, very much short-term lending, like T-bills and so on and so forth. So I think, in a sense, the financial sector or the banks have de-risked themselves. Now, obviously, we're talking about the top-level banks here. What goes on underneath that? I think there are a lot of banks still trapped with bad commercial real estate loans. I note that, according to FINRA, there is something around about 900 billion of margin debt in the equity market. That is going to be, I think, a problem for some. And on top of that, if I am right about the combined effects of a deflating credit bubble and tariffs, then a lot of the collateral that backs loans for banks is going to be underwater. So we do have the potential for, if you like, a crisis which makes the great financial crisis look really like a tea party. I think, in a nutshell, those are the problems. We've got a commercial banking system which is going to have to take on or weather a lot of bad debt, which is undoubtedly going to put some banks into negative equity. They will have to be rescued or something happen to them. And at the same time, you've got central banks themselves in negative equity trying to rescue a fiat currency system. And on top of that, as far as the Fed is concerned, they've got the problem because the US and other economies are going into a slump, not just a recession. Then government finances are going to go horribly wrong. That basically can only lead to one thing, and that is higher government borrowing, which means higher borrowing rates. The risks to people holding dollars, I think, are just going to escalate. And under those circumstances, if they're going to hold their dollars, they're going to need higher interest rates. But higher interest rates makes the debt trap against the government worse. So what do we do? I mean, the Fed, I think, is in an impossible position on this. It's quite clear that one of the consequences of these tariffs is to drive foreign nations, if you like, to cooperate more with each other, given that it becomes difficult to export to America. And we've seen this already. I mean, China has for some time been talking vaguely with South Korea and Japan about a mutual trade agreement. That has now gone to the top of the agenda. Now, I think this is very important because you're going to have three technological powerhouses coming together, and the implications, if you like, for the Industrial Revolution, for the entire Shanghai Cooperation Organization and BRICS, and any other nation which feels that it is being badly done by America. We're going to see the majority of the world, and by that I mean the world which is not beholden to financial markets in the sense that we are. I mean, if we have falling financial markets, it's a disaster. If, let us say, an East African country has falling financial markets abroad, I mean, it shrugs its shoulders and says, well, there may be some negative consequences for us, but this is not actually all that important in our scheme of things. I think that Trump is leaving a geopolitical vacuum, which I think will be very rapidly filled by the partnership between Russia and China. And we know that Russia is already bringing in, admittedly jointly with China, Iran. You've also got North Korea, who said to have been helping Russia on the Ukrainian front. And now we're going to get, I think, virtually every nation in Southeast Asia is going to swing towards this partnership, including, now this is probably a very controversial thing to say, but if I was president or prime minister of Taiwan, I think I'd be rethinking my position in the world. I mean, obviously, I would not accept being part of mainland China. But on the other hand, I think I would look very carefully about setting up, enduring trade relationships with China and maybe talking sort of vaguely about long-term cooperation rather than nationalization and so on and so forth. I think China would actually go for that. This is going to be, I think, very, very interesting. It does mean that the people who are left out in the cold will be America. America will go in on itself and it will feel that it doesn't need the rest of the world. I mean, this is the message it's giving through its trade tariff. It wants its manufacturing to come back home. It doesn't want anything abroad. This is a very, very parochial and autarkic view, if you like, but that's what we're dealing with. Europe has a huge, great problem. It doesn't know where to turn. I mean, they're still, if you like, guided by their own propaganda. They believe their own propaganda about Russia. And that's something that will have to change. How long it'll take them, I don't know. But the longer they delay, the worse it's going to be for Europe. And when I say Europe, not just the EU, but Britain as well. Britain, I think, is trying to be a bit more realistic, and it's got more flexibility than, say, Germany or France or whatever. So, but nonetheless, I mean, what we're looking at is the financial world. I mean, putting just Japan out of this because of their intended new alliance with China and South Korea. But I mean, you've got the UK, which is the major financial center in Europe. You've got Europe itself as a major trading bloc, and you have America. That's where the disaster is. So from the point of view of China and Russia, why should they be involved with it? And I think the implications of this for the dollar are very stark. We've been talking for a long time, speculating about what currency BRICS is going to come up with. They need a new trading currency. It started off with the Eurasian Economic Union, Sergei Glaziev being appointed to come up with this new currency, if you like, for the members of the Eurasian Economic Union to trade amongst themselves. And this would be the model for the wider BRICS, whatever, all this sort of stuff. The problem now is not so much that story. The problem now is that by withdrawing from the world, the dollar is going to go down in its importance a lot more quickly. And Asia now does need to find a replacement. Now, we don't know what form that's going to take. I know what I would do if I was involved with any policy committee, but I'm not. I think the way forward, quite simply, is to reintroduce a system of gold standards, credible, where paper currency can be exchanged for gold at a fixed rate. And that was indeed the basis of the Industrial Revolution, first of all in Britain, and then all around Europe and also America in the 19th century and up to the First World War. That is the only way to do it. Whether China has got the gold reserves, Russia has got the gold reserves to do it. Quite a few of the other nations haven't got the gold reserves. They could probably tie in with a more stable currency or a currency which has the gold reserves. I guess that the way in which central banks have been accumulating gold to sell fiat currency means that in policy terms, they're already moving in that direction. But I think the key point about this is that by withdrawing from the world trade, I think that the use of the dollar globally is actually going to decline a lot faster than it would otherwise. Countries that would like to join China and Russia camp are very often frightened of doing so because of, the consequences for their relationship with America. Now, I mean, you look at India. India has lots of trade with America. It's been looking at its position, I guess, in the light of these new tariffs. Other countries are frightened, if you like, of American-inspired coup d'etats. I mean, if you don't believe me, go and talk to the Pakistanis. Imran Khan, who's a perfectly sensible, good man, if you like, is in jail. Why? Because there was a CIA-backed coup d'etat, putting in the previous people who, guess what, were the people who accepted bribes, bribing this, bribing that. I mean, they were as rotten as you've ever seen. And Pakistan has been plagued with this for decades. Why? Because we keep on buying their influence by bribing the politicians. And so Imran Khan gets in, who cannot be bribed, and actually sees Pakistan's future as being very much tied, if you like, with what's going on in the whole of Asia, which is, a Chinese and Russian party, plus the fact that, they have a common border with Iran. That didn't suit the Americans. So he gets chucked out. He's in jail. They tried to assassinate him. That didn't work. A few of his supporters got killed instead. We forget these things, actually. But I can tell you, then, around the world, I mean, you've got various other countries have been watching this, and, they know exactly what's going on. They're now, I think, less frightened of America because of the signal on trade. America is withdrawing from the world. Oh, hooray! We can actually now advance our nations. And we can do it, if you like. I mean, honestly and politicians, don't really go together too much, but at least more honestly than a situation where the politicians are bought and paid for by America and Britain. That is now hopefully coming to an end. And I think that because so many of these countries are going to be less fearful of us, then they will get on with business with China and Russia. And this is a major, major change.